Hi guys, welcome to my videos. So guys, we know that Government of Canada, or you can say Bank of Canada, has increased the interest rate again by 50 base points. Now this is having a very uh, difficult impact on the lives of many Canadians, especially those who own home under variable rate mortgage. I saw article and even I spoke to some of them. Like some of them, like it's really painful that now they are being forced to sell their house and move to a tenant environment. Like they're gonna rent. Imagine you were paying your bills, your mortgages on time, but because of high increase in rate, now you are forced to sell your house because you can no longer afford the mortgage payments, and you are like you have no option other than to rent. But this is the reality. I know it feels really bad, but this is the sad reality. I saw a case where somebody, after this increased uh, interest rate, is gonna pay around $4,000 a month that they cannot afford. So now they are going to rent after selling their house, and the rent is going to cost them $2,500. It is still a high amount of rent, but at least better than um, what they are paying now. And the lease is going to stay at least for a year. So for 1 year, their rent is going to be this, and yeah, it's really hits hard. So that is why, guys, I always tell, like, again, I'm not a realtor or anybody who has any professional or licensed relationship with real estate industry. This is my personal advice, that have protections for you, especially when you go get into real estate. Even if initially you have to pay higher, go for fixed, because then you are stress free for the duration of your term. Like I purchased my house back in 2019 for 5 years fixed. So I was offered lower interest in variable, but I did not go for it because I said I want peace of mind. So for 5 years it's fixed. Again, I don't know what's going to happen next year, but at least till then I have no stress of mortgage rates going up and down, interest rate going up and down. And also, like, if you have a mortgage on fixed cost now, like, find my suggestion is try to find out what is the eligible amount you can pay every year before any processing fee is charged. Because if you have like a closed mortgage, then you have a limit on prepayment that you can make. So if possible, do the prepayment and try to decrease your principal as much as you can, because whatever you do in life, I mean, when your mortgage gets renewed or anything, it is always going to be based on your uh, existing principal. So if you do prepayments and reduce your principal significantly over the time, then it's going to be much better, right? You don't have to be worried about, I mean it's going to be better, and then your payments will be less because interest is going to be calculated on your principal. So what I would suggest, like, if you have your mortgage getting renewed next year or around that, and there is so much of uncertainty, get some professional advice. Like, you can contact your mortgage broker, bank, or even you can do using online resources. Find out how much prepayment first of all is allowed and how much you can make based on your budget. And also see the combination that next year, based on current rate, or you can even increase the rate by a small amount to just to have an extra width for yourself, that next year if I have to go and renew my mortgage, what I'm gonna pay. So if you do like this will definitely help you up to a very good situation. So again, like, reduce the principal so that it reduces your interest rate. Rest is up to you guys. Thanks for watching this video. Please subscribe to the channel. Thank you.